Good morning, and welcome to part 2 of the Next Gen Payments and RegTech Forum, Back on Track. We're so excited to welcome you back for what is definitely going to be an action-packed 2 hours. We have got 15 amazing contributors. I'm just amazed by this whole group of amazing industry experts that are joining us today. I'm so excited about that. We have got amazing contributors as well. I want to thank all of them for being part of the event today. I would also like to thank our sponsor, iSpiral. Thank you so much to iSpiral for sponsoring again a part 2 of the Back on Track event. We'll be hearing more about iSpiral later on in today's 2-hour session, so please hold on for that. And we're very excited to have, Koen and Sophia to be chairing today. Koen and Sophia have got amazing backgrounds. Koen is the CEO of Blanco. Sophia is with SMP Market Intelligence. And we're very excited to have them to be moderating today's sessions. I'd like to also thank the CUBE team and Marta for putting together today's program. Very impactful agenda, so we're really excited about that. There's definitely a lot of work that goes behind these agendas and getting everything together and getting you all here today. So thank you so much to everybody that's contributed today. We will be playing a short video just to set the scene and give a little bit of a heartbeat while everybody joins onto the sessions. And then we'll be handing over to Koen and Sophia, who will do a bit of an intro. So I'll be posting the video right now, and we'll be all joining you in the next 60 seconds for more on the NPF and RegTech Forum. Okay, I don't seem to get the video, but the video will be playing shortly. So I'm handing over to Koen. Sophia, thank you so much, and we'll be ready to kick off. Thank you, everybody.
Hi, good morning. So delighted to be here. Welcome, everybody. My name is Sophia Ferber. I am the FinTech reporter at S&P Global Market Intelligence. So we are the news and data arm of the S&P Global family. I am very excited to be here because it's been obviously most of us have spent a lot of the last year in lockdown, but as we all know, the fintech and payments industry has not stood still, and there has been a flurry of activity in innovation, in investment, and also on the regulatory side. So what better time to bring together such a fantastic bunch of speakers to discuss everything and take some time to process everything that's been going on and look ahead towards the future. And I'm now going to hand over to my fellow co-chair, Koen, to introduce himself.
Thank you very much. It's such a pleasure to be here today. Sun is shining outside, but more than ever, I agree with Lily. There's so many interesting contributors today, and the events organized by Lily and Marta, they're famous because they are very interactive. So I hope today that with all of you on stage, off stage, that we can have a very interactive session and a lot of new insights. And yeah, it's great to be here. And myself, my name is Koen, and I would define myself as just being passionate about RegTech and also payments. So payment is my last bit on my personal thing, but I'm looking forward to learn a lot more today, which will happen as well. So Lily, looking at you, how does it go with the video?
The video is, let me try it one more time because it's really amazing, and I really wanted to thank Fast Forward Banking for putting this together. It's such a nice snapshot of
yeah, here we go.
Great.
Lily, I can only agree that it's a very nice video. So it sets the scene very well, to be honest.
Excellent. Thank you. I'm glad we got that together. We're ready to start. So thank you, everybody. Have a great event, and we look forward to your feedback, and we look forward to the interaction, and keep those questions coming for our panelists. Thank you so much.
Great, well, fantastic video, and I don't know about everyone else, but that certainly woke me up. So without
totally agree.
And also, yeah, slightly disconcerting to see one's face flash up on the screen. But yeah, without any further ado, I would like to just hand over to our first keynote speaker of the day. This speaker is going to be of particular interest to those in the audience who, like me, are payments geeks. We have got Sulabh Agarwal. He is the managing director of global payments at Accenture, and so he actually leads the global payments practice for the firm. And he is going to give us a keynote now on global payment trends. Sulabh, are you ready to come onto the stage?
Hello.
There he is.
Fantastic. Morning. Good morning, Sulabh.
Hi, morning. Good morning.
I'm going to hand it over to you.
Thank you. Thank you. Yeah, so payments, a very exciting topic. We're really close to my heart, and I'm just going to share some trends I see in the market based on what is happening. Or I think ask someone to pick the news articles for the last 6 months in payments and categorize them into 7-8 areas. So let's talk about what is in the news, what's new, and what's trending in payments. I'm sure as payments enthusiasts, you're all very glued up in any case, but let me share my perspective. So new forms of currency or digital currency is something that I think all of us are hearing about for a few years now. I'm not sure if you heard Rishi Sunak's, the Chancellor's announcement yesterday about Treasury and Bank of England needing to work together to come up with the UK answer to central bank digital currency, which is very exciting. We also heard PayPal very recently announcing that it will allow crypto as part of the checkout in the PayPal account. Not just that, I mean, lots is changing, right? Like Elon Musk saying you can buy Tesla using crypto. You've got Visa and MasterCard actually going in the whole stable coin space and making some announcements. There's a lot of activity around the whole central bank digital currency space. Like we as Accenture are working closely with Riksbank in Sweden to do the pilot for e-krona, which is their version of central bank digital currency. And that's not just, I mean, there's about 8 to 10 central banks globally. Obviously, China is moving quite fast in that space, but a lot of other countries are actually moving in the whole digital currency space. So it does beg the question, where do you prioritize digital currency in your roadmap as you're thinking about it? Do you allow crypto or not, which has still got compliance issues in certain organizations' mindset? You've got the central bank currencies coming, which are probably safer or more compliant, given that they're backed by the central banks. A very interesting space, clearly something that will define the future of payments in the coming times. If I move to the next slide, sorry, it's taking a bit of time to load. Yeah, I mean, we all know that the rails are changing, the payment rails, whether it is ISO 2022 or real-time rails now almost coming across most of the countries in the world, is changing the whole landscape around both like what data can you carry in the rails, what speed you're moving the payments at, and how are you processing them. And there's a lot of partnerships and movements in the industry. Obviously, Swift was the first one to realize the issue with cross-border and the whole Swift GPI was brought in, which is kind of becoming more and more universally available, but also partnership with Chinese central bank. You can see there is clearly MasterCard with the real-time payments infrastructure is also going to various markets. TransferWise making an impact. I mean, and also moving into the credit card rails with working with Visa. So this is going to be an interesting space around what are the rails for the future and what payment demands will be fulfilled by these rails. This is just speed, the data which is flowing through, but also the propositions which come along with them. If I move to the next one, obviously no conversation these days is complete without pandemic, and we all know that pandemic has changed the industry, the payments industry for sure, right? What e-commerce numbers have gone up in the last 1 year at the same rate that what happened in 5 years before the pandemic has happened in almost the 1 year that we've been through this unfortunate time, but I guess for e-commerce, the change has been phenomenal, and so has been the whole digital banking and the digital transformation change. In the UK, we've also seen contactless and the wallets picking up, and clearly the increase in limit to £100 is a clear direction of travel in terms of where the market is going. Key question that still remains is the physical plastic going to remain? In fact, someone was challenging me even to say, well, the mobile phone will remain in future as virtual reality comes in our glasses and could replace the phones in coming future. But clearly, how many physical things are we going to carry in future, and at what rate will they start to get replaced is going to be an interesting trend to watch. Trust, the stakes are getting higher. I mean, clearly lots is happening in the market as a result of the recent changes, and the fraud rates are increasing at the same pace as the growth in e-com, and it clearly is a significant problem that the industry needs to deal with. I mean, I found it very interesting that supermarkets are more trusted brands in Australia. Are the most trusted brands. So clearly, the incumbents cannot just sit back and relax and expect that the brands will remain as trusted, and they have the right to the trust in coming times as well. And that's clearly creating the whole set of expectations from the consumers. Events like Wirecard clearly have also changed the industry dynamics in terms of just growth versus a little bit of check and balance in terms of where you're going with growth as well as growing. So again, trust is an important aspect of where things are going. Yeah, someone said in the chat, Britcoin. Yeah, Britcoin and not Bitcoin is what Chancellor tweeted the other day, I think. Yeah, the regulators are getting more involved. I mean, the whole landscape is changing so quickly, is that regulators are trying to figure out a way as to how they can keep up to the pace, and they're taking actions. I mean, in the UK, we saw buy now, pay later. There's a clear direction from the regulator to say that is going to be an area of focus for them. We've got legislation for the non-financial institutions to say, well, how they can be offering the payment services like the WhatsApp Pay in Brazil. We can look at NPF in India, looking at putting some controls around what's happening with the payments data. Chinese regulator getting excited about the Alipay and what may happen with it. So you can see that, and also with regards to whole crypto world, you can see lots of movement where the regulator will try to put its arms around the problem that it is still systemically important. It is still important to the consumers. It is still important for the innovation and all the factors which impact the economy as well as the society at large needs to be governed. So you will see more action in this space while initial movement is already seen. Every company is a fintech company. Traditionally, you would think that it was either the financial institutions or more lately the large payment companies, which were the payment organizations. Now it's like almost every company across the world is thinking about what's their payments proposition, right? Like, who would have thought that even in China, WeChat and Alipay, which is kind of the space they're so dominant in, will be challenged by ByteDance, where you look at Walmart creating startups, Starbucks. Someone said to me, with the prepaid cards, it is kind of the largest, or one of the largest set of accounts in the United States. And Uber actually has got the largest set of SME accounts. If you look at the drivers who have an account with them, again, the whole industry dynamic is changing as a result of more and more players coming into payments, and I think the trend continues to hold. Enabling the next billion users. I think what's also very clear is as cash is getting replaced by electronic payments, a lot of the geographies globally are becoming more attractive for the large players to enter in. Stripe taking active role in Africa, MasterCard looking at India, and various others, Apple Pay in Mexico, etc. You can see like the opportunity to actually digitize payments and actually replace cash and create new value propositions and value add in the market is only increasing and giving lots of new growth opportunities to organizations across the world. And finally, I think the customer still rules, right? What we are seeing is, buy now, pay later is a good example of or Klarna. Better customer proposition, point of sale, buy now, pay later. Credit is a clear example of where local payment types, local needs, customer and consumer needs are going to be still at the forefront as the disruption continues in payments. With that, I am going to hand back to the chairpersons, Koen and Sophia. Thank you so much.
Thank you so much, Sulabh. That was a great insight and a great kickoff for today. I think you mentioned all the trends already. So what's left for us to say?
I'm sure there's each of them you can spend a day on.
Exactly. No, it's great. It's also great to see that a lot of people are active in the chat. So don't hesitate to use the chat also to raise your questions to the speakers, to the panelists, to everyone involved in this speaking. So thank you very much, Sulabh. That was a great introduction. I really liked it. And the quote I liked the most was, "Every company is a fintech company." So let's take that along going forward. Next session will be a live panel discussion that will be led by Sophia. So may I welcome Sophia and all the panelists to the stage. And as soon as I see Sophia coming in, I will hand it over to her. I see first people already coming in. Some interesting comments already on the chat. Great, so keep it coming. Sophia, the floor is yours.
Fantastic. Well, thank you so much. And thank you, Sulabh. That was really fascinating. And as Koen said, you certainly covered a lot of bases already. But that's actually a fantastic place for us to start with our panel. But yeah, without further ado, I would like to welcome my panelists to the stage. I am very, very excited, and I'm very much obliged to Cube for assembling such a eminent panel of thinkers and practitioners in the fintech, regtech and payments world. And yeah, very excited to discuss some pressing questions facing the fintech, payments and regtech industry with all of you in just a few moments. So I'm going to go ahead and introduce my panel. We have Hedvig Nijens, who is the Managing Director of the International Banking Federation. We have Ritesh Jain. He is the co-founder of Infinite, and a lot of you will know him as the former COO of HSBC. Next up, we have John Asprey. He is the Director of Privacy and Data Protection at Promontory Financial Group, an IBM company. And we have Sergio Malgajes. He is Director of Digital Transformation at Millennium BCP. And last but by no means least, we have Matteo Menino, and he is the Policy Advisor for Digital Finance and FinTech at WSB ESBG. So welcome all of you. Thank you so much for joining the panel. Now I'm actually going to kick off with something that Sulav mentioned in his presentation, which is cryptocurrencies and digital currencies. Now for anyone who is interested by either of these things, the past week has been quite an exciting time. It's been rather a lot going on. We've seen Dogecoin, which is a cryptocurrency, which started off, I thought, as a bit of a joke, see its market cap growing larger than that of, I think, Barclays and Lloyd's. And we've also had the announcement of Bitcoin from Rishi Sunak yesterday. So huge amount going on. But what I'm really interested to do is to find out from you as industry participants what this means for the future of payments. And I would first of all like to kick this over to Hedvig. What do you think this means?
Yes, so I'm really excited, as all the speakers have been saying already in this session. With this new technology, you can do a lot of new things, and I think that the central bank digital currency, the stable coins, but also to be fair, with Bitcoin brought as a kind of hype, and what Facebook brought as a kind of hype with its Libra and Diem, it really shook us and made us think faster on how we can use that technology. So I would say yes. Technology, we as the banking industry, we embrace it. We think we have a lot of things that we can share in this respect. We really think that technology can bring faster payments, can also include and bring up that smart money ideas. Smart money, that means a programmer money, that means that you can include data, include the recipients, so you can enhance your client process, in theory, much more fast. So there is a lot of things possible in terms of technology. In terms of three things to be looked at, I would say first, interoperability is very important for each and single person in this audience. No, payments is all about linking the different chains and not having ring-fenced money that would bring us nowhere. The second thing is safety and privacy. And so you would say central bank digital currency is very good in terms of safety and secureness. Bitcoin or coins in general, perhaps very fast, but what about safety and data privacy? And then the third element is the bigger context. If you would move towards stable coins and digital currency, what about the role of banks in terms of intermediation, in terms of making those deposits work for the economy and reinjecting the money into the economy? And then last but not least, what is the role of central banks? That's exactly the role, the question they have on their desk. If there is no more cash, how can they use central bank digital currency to keep their role in terms of monetary policy? So that's a summary. Thank you.
Thank you, Hedvig. I mean, there's some really big existential questions there for the banking industry and the payments industry, and huge opportunities as well. But I mean, I imagine there are some risks out there as well. And one thing that I've been thinking about certainly a lot is that we've seen a lot of cryptocurrencies being used as a store of value. I wonder where we are in the tipping point towards seeing them used more for payments, you know, for buying goods and services, and I'm very interested to see how that is going to evolve. And I was just wondering if I could just go over to Ritesh. You know, what do you make of this explosion of cryptocurrencies and digital currencies? What do you think it means, and how do you think people are going to end up using them in the real world?
Thanks, Sophia. And as Hedvig said, the cryptocurrencies, especially, it's a use of the technology, right? And that's why we are seeing a significant surge in the market. There are new coins coming up, as you rightly said about Doge, and especially Safe Moons. You know, in the last couple of weeks, it is growing like a no man's land. So how far they can go, And on the top of that, whether the monetary authorities will keep mum for how long, whether they will let it happen. Because it's about losing control onto the payments, losing control onto the currencies, right? Cryptocurrencies are great, but I see them as a means for the opportunist or as well as for the speculative investments, right? Whether you can really consider cryptocurrency as a means of investment or store value, I would be significantly cautious about it. Uh, there are even conversations around stacking Bitcoin against gold. Can you really do that? I would be cautious about that too. On the top of that, what cryptocurrencies are doing at the moment, they are bringing quite a lot of liquidity in the market, which is okay, but at the same time, it is creating a lot of issues and challenges with the payment systems as well as the credit. So people with the deep pockets can stack their money as a speculative investment. That's great. But when it's getting down to the people, the daily wage workers who are taking money on their credit and implementing that for buying cryptos, how far that can go, we need to be really cautious. To answer your question in terms of the payments, cryptos are basically proving a way the use of technology. And we already know that there are use cases that we have implemented in the banks for the wholesale payments already. Look at XRP, Ripple for that matter, or Swift, what Swift has done over the period of time. It is not definitely not related to the cryptos, but in terms of the payment transformation. So we are going to see a significant transformation in payments by use of technology. And that technology is going to be the distributed ledger. Let's not confuse that with cryptos. Let's come back to a bit more regulated digital currencies. Those are CBDCs. And the regulators need to come forward and expedite this. Otherwise, we are looking for a major trouble in near future. If we continue to let cryptos run the market the way they are running at this point of time, because there are umpteen exchanges, there's no regulation, and there's a significant fraud.
So crypto potentially a force for good, but needs to be tamed. We are very lucky on this panel in that we have people from a range of different spaces in the financial system represented. And I would like to take advantage of the fact that we have Sergio here, who is actually from an actual real incumbent bank. I would love to get your sense, Sergio, of what the rise of crypto and digital currency means for you as a bank.
Yes, I totally agree with Ritesh, because before using the crypto, we have to make forward the regulation, because otherwise it will be very difficult for everybody to use crypto as a real fiat currency, which means that before using the crypto as a payment or normal payment, we have to have this really regulated. And as a bank, we just are going to we're still looking at the crypto as something very interesting. And of course, we are looking for the future. And the first presentation show us that is probably one of the most important things in the future. But we have to distinguish in programmable money and programmable payments. It's completely different. And as Richard said, it will be, for example, a very important thing for programmable payments, and this will be accomplished for smart contracts and so on. And like this, we can really have this regulated, but not using cryptocurrency just before have this regulated, because otherwise we'll be just like now, just for speculating and just for something and saying that as this crypto in the banks. And otherwise it will be for the banks very difficult to use a normal cash or a normal fiat currency. That's why we say that before using, the banks still need regulation to say how to use it and to make them programmable payments using these smart contracts.
Great, thank you very much, Sergio. And we've had an audience question come in. Now, I will just apologise to everyone. Something has happened with my computer and my camera has unfortunately gone off. So I apologise for hiding my face. It's absolutely not deliberate, but bear with me and I'll try to fix it. We've just had a question come in from Chris Crespo, who says, we're seeing a surge in decentralised cryptos. All the while, CBDCs are only just waking up to the trend. What benefits will CBDs hold that existing cryptos lack? Does anyone want to jump in and answer that from the panel?
Yes, I can, and we know it because we have China in our membership, and they are the furthest in the implementation of their central bank digital currency. So what they say is that central bank digital currency is, of course, issued by a central bank and is completely a trustworthy device to pay with. So you can really be assured that it's a legal tender, that it will be agreed. You do not necessarily have the same insurance, as we heard from all the other panelists, if you have invested money in a cryptocurrency. For sure not. Perhaps if you invested in a so-called global stable coin, that's a coin that is pegged towards a specific currency. So I really think we should make a difference between central bank digital currency, global stable coins, and cryptocurrency. Cryptocurrency, just like Bitcoin, it's used for a lot of things which can be okay or not, but it's not necessarily used or usable for payments, and certainly not for secure payments.
Great. No, thanks for clarifying that, Hedvig. I think that's all very, very clear, and there are obvious advantages to the CBDC. So good to see that central banks across the world are pushing ahead with various concepts and pilots. Now, I'm going to shift the discussion on to a slightly different area. Much as I love talking about CBDCs, and I probably could do so all day, I'd like to talk about identity and privacy, because I noticed in his keynote session, Sula brought up the question of trust and the fact that, you know, during the pandemic, we've been living more of our financial lives online. We've been buying more stuff online. The stakes are suddenly a lot higher. And I wanted to just hop over to John to talk about privacy and just to talk about what the remaining pain points are within the fintech and payments industry when it comes to data privacy, safeguarding people's identity, etc.
Okay, yeah, I mean, there are a number of points that we can cover, and maybe the first area that I wanted to talk about, which is very closely linked to the existing GDPR, is all around fairness and transparency. And of course, this has a lot of alignment with existing financial services regulations as well, in terms of treating customers fairly, being transparent in terms of the data that's collected, what that data is actually used for. But I wanted to raise a slightly different point as well, because it's very, very timely, and I'm not sure how many on the panel are aware, but just last week there were the draft proposals from the European Commission for AI regulation were actually leaked. I think the formal announcement is actually due tomorrow. And the interesting thing there is really applying a GDPR style regulatory framework and equivalent fines, which is 4% of global turnover, to the regulation of AI. Now, the interesting thing is they broke it down into 3 areas. They talk about prohibited practices. So this is things like manipulation, surveillance, but it also includes social scoring, and using social scoring as a barrier to access is a challenge. Also, they talk about high-risk systems, and they class high-risk systems as those involving biometric identification in public, and also access to credit is considered a high-risk AI system. And then really anything that has human interaction. So if a human is in dialogue with an AI, again, that is one of the areas that they want to cover. So the interesting thing here is it demands a number of things. It demands something that many of you will have heard talked about, which is called algorithmic transparency. So, you know, you need to be able to explain how the AI is arriving at its decision to some degree, so that it's kind of clear what is being done with the data, what criteria are being used. Also, you have to put controls in place that are actually monitoring the use of that system. So how has that system been trained? Is it drifting over time? What sort of controls and monitoring in place around the data? So I think it's really interesting. I think that's going to affect, and I know we talked about in our preparation, the whole rise of buy now, pay later, and the blurring between actually paying and taking credit is very blurred now. You know, when you make almost any financial transaction, you can either pay or you can take an instant credit facility at that point to pay. The couple more things I will mention, and then I'll pause because there may be a bit of interaction. I mean, the other things that we typically look at for clients, and I think it's very prevalent in fintech, is third-party relationships and data transfers. So maybe slightly a sidestep to payments, but I think very closely linked. You know, around PSD2, there are lots of aggregators, there are lots of service providers around investments, savings. And of course, there's lots of data sharing between multiple parties there. Now, it's really incumbent on the service provider to ensure that the equivalent level of data protection is given across that whole ecosystem, and that all the parties in the ecosystem are managing the data in a safe and secure way. And then one final thing, and then I'll pause. We also often have to look into the cross-border nature of data transfer. So again, you know, when you're providing technology-backed products with a complex ecosystem, there's also often quite a complex technology platform sitting behind it. And, you know, where is that data actually going? Is it crossing any geographical borders, any jurisdictional borders? Where's that data being backed up? You know, and there are issues around international data transfers that often are not considered. So I'll pause there.
Great, thanks very much, John. There's a lot to delve into there. I'm interested that you mentioned buy now, pay later. I'm going to park that and come back to it later in the discussion, because I think it's just become such a huge part of the fintech landscape all of a sudden, as far as I'm concerned.
Klarna are in trouble at the moment. They're being investigated by the ICO. So,
yeah, been rather a lot going on with Klarna. But I wanted to just kind of stay for a moment with the idea of privacy, but also like the ethics of data and the ethics of identity, because the stakes are very, very high. Both in terms of consumer protection. I mean, ethics about how we use AI to score people. So I think it's kind of a big moment for the industry to untangle some of these issues. And I thought it'd be great if we could next pass over to Matteo, because I know that you're someone who has really got your finger on the pulse when it comes to policy developments in Europe. And I was just wondering if you could talk us through a bit what the latest thinking is in Europe around ID in the context of fintech. So yeah, thank you, Matteo. If you would be happy to go ahead.
Thank you, Spy. Indeed, you mentioned privacy and data sharing, and that will be also an area where EU regulation is awaited. For example, the EU Data Act will be an area where the digital economy, the digital interconnected system that we see particularly now in the time of pandemic, makes it so that citizens need a digital interconnected identity system. And this is not only a fundamental need and also a right of consumers, but also an opportunity. For example, just to set the scene, a McKinsey study has evaluated the impact of business that could be unlocked thanks to digital identity solutions from now to 2030. And it amounts on average to 3% of the GDP in developed countries and up to 6% of GDP in developing countries. And so an interesting fact we could start from is that on average, EU citizens have something like 90 digital identity each, between login data for social media accounts, online shops, or mobility platforms. So out of this turmoil, how can we come out with harmonized solutions? In terms of regulation, an announcement from the European Commission, which has been tasked by the European Council to develop a EU-wide interoperable digital identity solution. An announcement is awaited for 26th of May. And some of the elements have leaked. For example, the underlying technology might be distributed ledger technology. so blockchain, and this creates a nice link also with the topic we treated before of digital euro, central bank digital currencies. So it's not only about how which technology will be used, but how technology will be used. Digital identity is it's a topic where new business models are emerging. Banks can play a role, should play a role. It is important to remark that from the perspective of regulators, digital identity should not be only something that entails the financial sector, but something that lies across sectors. And we always hear this also for data. John was mentioning before, and I mean the cross-sectoral regulatory frameworks. Those would be probably the new thing. And for digital ID, it is an opportunity because as a citizen, I might need to use maybe a bank as a verifier, but access my personal information about my health condition, especially in pandemic times, for buying a ticket or showing digital green pass to show that I've not tested positive or things like that. And I would like to bring here the perspective of the banking sector, because as ESBG, our members are retail banks, and we have launched, together with other European credit sector associations, a task force where we bring together experts to have, first of all, a common understanding of what digital identity is, because there is a fragmentation even in the definitions and cultural approaches across different countries. And then secondly, to develop a white paper around the summer 2021 to also give a blueprint about what we expect and which role banks should play. And that will be a topic that will be of increasing importance. And so far, I think it has been highly underestimated. And in Europe, there is still a lack of available and widely accepted solutions. And there is no single use cases which entails cross-border transaction that has emerged. So it will be also a matter of political harmonization, which solution will be used and how national level solutions will be harmonized. Then also I will pause here so that
Matteo, thank you very much for that. I think it's a fascinating topic, and I feel like it's one of those policy developments that just kind of got a bit lost in all of the noise of all of the news happening over the past year or so. I'm just interested to ask other panelists, do any of you, from your various perspectives as sort of industry experts, bankers, CEOs, what's your view on the idea of a pan-European digital identity? Do you think that is a concept that would be good for the industry?
See, the digital identity is must at this point of time, because my fundamental question to everybody, do you really own your identity? And the answer is no, you don't. You borrow your identity either from the big techs or the other providers, right? So we need to empower the customer to have their own identity. And I've got a white paper on this, and the topic is the DID or the SSI is an inimitable combination of open banking. So especially when we are moving forward with the transparency in the banking, and we are opening up the doors for the financial systems through the open banking, and in the future for the open finance, right? And the digital identity plays a significant role. So we need to really focus on an interoperable digital identity, whether it's going to be self-sovereign, whether it's going to be distributed. That we can discuss that, and we can get into a rabbit hole of that discussion now. In a nutshell, yes, we need an interoperable digital identity where consumers and the customer have got the power to control that. And that would be the future for the financial services. We are looking into open banking. Open banking offers you or empowers you to manage and transact the way you want with the service provider you want. But ultimately, you got to identify yourself through your existing service providers. As a consumer, we tend to identify ourselves with the various financial systems on a day in and day out. Why do we have to do that?
Yeah, I think, do you know, I feel, Ritesh, I feel you and Matteo should connect offline and speak about this. It sounds like you've got you've got lots to say on the topic, and I wish we had more time on this. But I just wanted to bring in some of the other panelists. You know, what, just to kind of get a sense of what you feel about digital ID. Hedvig, you know, from the IBF perspective, is there something that you thought about?
Yes, absolutely. And what I can bring at this table is, of course, the different experiences that we have around the world. So that the major champions in terms of digital ID is India, actually, with the Aadhaar system, where they managed to include more than 1 billion customers in a digital ID system. That's one part. At the other side of the spectrum, you have Facebook, where Facebook actually, thanks to their platform, they can identify a person, perhaps not an identity, but a person, and link that to data, process, etc. So the question is, why? What could be digital identity? I think there is great potential for the technology. There is also great potential in terms of addressing the data privacy issues. Whenever I travel, I have to put in my details of my passport, birth, on all kind of platforms to check into hotels, the flights, etc. This is a tremendous risk in terms of digital identity theft. So it would be better in theory that you can log in with your bank account or with your digital ID from your country. This would be in a way safer, because then you can ring fence the confidential information and you have like a third party provider and you need a secure link. With Facebook, it's the other way around. They have a lot more information than we all have together. But then the question is, how do you prove your identity? How do you make sure that that anonymity does not lead or enable fraud or bullying on social media? So the decoupling of real identity and your kind of avatar identity on social media is a real issue. But I would say, globally, we as a banking industry, we are part of the discussion and the solution, and we really think we should move forward.
Hey, and I'm going to pass that over to the banker in the room, or the one of us who's currently a banker, which is Sergio. What do you think about all of this? Because I'm sure this must be a very pressing issue for you guys, the Millennium BPC.
Yes, I think that data privacy and digital identity are strictly connected, and we understand that these two things must be seen together, because otherwise this digital entity is not really something that people trust. So to make this trust, digital identity must be connected with this data privacy. We understand that with COVID-19, all this digitization accelerates a lot, and to people were reluctant to visit a bank branch, and we don't see people in the branch, and the all the data that we get to open a remote account and onboarding a customer is really something that we are not proud of it, because we really ask people to make a video call, we ask people to make a video conference, we ask people, so this is not frictionless really. And with all this regulation, this know your customer and so on, I know that people can look at the digital identity for something that is really very useful, is really used with respect and with data privacy together. So having a digital entity starting from now is a very important step to make all this digitalization, and for the banks, of course, is a very important step, because people can digitally check individuals, for example, passport data against the government database and so on. So digital identity is something that is very useful to reduce the frictionless, and also for the banks to make sure that it's really the person that can validate in a safer way all the transactions and making the onboarding and so on. For the banks, for sure, is one of the most important things that we all see, with regulation and data privacy, of course, associated, to make the customers trusting in the banks, for example.
Yeah, so this brings me on nicely actually to our poll, which I think you can see, everyone, if you go to the bar on your right hand side, so that's audience as well. There is a poll about the question is, which biometric authentication technology do you consider to have the greatest potential for payments in the next years? We are seeing quite a clear lead with facial recognition. At the moment, I think people are a bit more skeptical about fingerprint scanning, and you can see actually eye recognition has gone up. Panelists, do any of you guys have a sort of strong feeling? I mean, John, I was thinking, because you're about privacy, and which of these do you think have the most mileage for safe identification customers in the coming years?
Well, I was going to make a point on the back of the previous question as well, and
Sure.
it's a slight angle on this. I mean, you know, a lot of the privacy regulation is really about putting the power in the hands of the consumer and giving them choice about the information that they share. And what they get in exchange for sharing that information, you know. So you have to consider, I share data about myself, I get value, or I get some sort of service in return. So I think, you know, a lot of what we are getting in discussions of with clients is really balancing that concept of transparency, consumer choice and control with obviously the security requirements and the safety requirements of protecting that person's identity, their data, or so on. So, you know, my initial reaction to that is you need to present the pros and cons to the client. And you know, I'm sure many of you are involved in PSD2. There are mixed levels of authentication. I'm sure some of you have seen this, where, you know, to get access to certain services, you might only need to provide a password, or you might need to just check a box of a picture. To get access to more sensitive information, you might need to provide a facial recognition scan or a fingerprint scan. And again, I think, you know, you can offer mixed levels of authentication. I think something Sergio touched on is, if you make something really intrusive and invasive for a customer, when it's not proportional or proportionate to the service, then you're going to turn off the customer. You know, so it's a balance between friction. You know, when you talk to people designing mobile apps, they all talk about friction. We want to reduce friction. We want to make it really easy for the individual to transact. But it's a balance. You know, I think you need to be really transparent. You need to build it into the design, and you need to offer consumers choice, and also be very clear to them what they're getting in return for, you know, what they're sharing with you.
Yeah. Oh, great. Thank you, John. So yeah, I can see now we've got a clear lead for facial recognition. Matteo, just very, very quickly, because I know time is running out. Do you have a view on which of these methods of biometric authentication has the biggest potential in the coming years?
I voted myself for facial recognition. I think this is, of course, it depends also on the fact that, of course, Apple put it as the flagship recognition mode, so it arrived at some point to banks as an external factor to comply with and to advocate for. So this was what my vote was for. But indeed, I fully agree with John that here, when fighting frauds, when privacy concerns are concerned, the key here is to put the consumer in control and to create a hub where the consumer is always in the capacity to decide which and how, which elements and how you can share. Another important aspect, I think, it will be regulating a relationship between different kinds of entities in the innovation field. So incumbents, retail banks, but also big tech giants, but also fintech startups. So an important evolution has been, for example, the DORA, the Digital Resilience Operational Act, in a legislative proposal in the EU, which is the first comprehensive way of tackling the problem of digital operational resilience in the EU. But some similar, I'm sure that similar regulations are under development in other countries. So the idea is to put the consumer in control, and behind regulate how outsourcing, cloud, or those elements work in the back office, if we can say so.
Great. Well, we are coming right up against time now. We've got one comment from the audience, which is from Konstantin Tupikov, and he says, perhaps voice recognition is best because it cannot be faked without the user's consent. I think that's really interesting. I'd love to stick around and discuss this more, but unfortunately, I am going to have to close off the panel. There are a lot of topics that, unfortunately, we were not able to get to, but I hope that's given us some food for thought to carry on to the rest of the morning session. I feel like we've covered a lot of things, ranging from, you know, what is the meaning of the banking system? What is the role of a regulator? Big, weighty ethical questions around identity and privacy and consumer ethics. So that it's been an absolutely fascinating discussion, and I would like to thank all of you very, very much for participating and for being so lively, and to the audience for your questions and your participation in the polls. And once again, I apologise for disappearing from your screens. It's a tech glitch at my end. It's not Cube's fault, and yeah, I realise how ironic it is to be having a discussion on identity while not showing my own face. So apologies again, and I'm now going to hand over to Kuhn. Thank you all so much.
Thank you.
Thank you very much, Sophia. That was a great panel discussion. Oh my God, I was intrigued actually by the comment on when we were talking about crypto, when payment is not money. And you also made the link at the very end, Sophia, where you said it's about the raison d'être of a bank. What's the reason for a bank? What's behind the fence? What else is there? And there, I think this is a very nice bridge to our next session that we'll have. It will be an inspirational session given by Michael Clark. Michael Clark is the Vice President Global Product and Technology Lead for Platforms, Ventures and Partnerships at MasterCard. I had the privilege this morning to already get a little glimpse of his presentation, so I'm very looking forward to get Michael on stage and to get his, here we are, welcome on stage, Michael. And just wait 1 second to get the presentation on, and then the floor is yours. Here we go.
Cool, I'm under pressure now.
Setting the scene.
Absolutely. Good morning, everybody. As mentioned, I'm Mike Clark, so I look after the product and technology side from the ventures and partnerships and platforms business at MasterCard. I'm going to take you on a bit of a journey today. And like any good journey, there's always a start. So let's just talk a little bit about what we do. Let me just get my screen in a second. Here we go. Okay. Let me just talk a bit about what we do at MasterCard. So I'm very fortunate to work in a team of incredibly clever individuals. We specialize in, well, we pride ourselves on solving incredibly complex problems and delivering against those using either latest technology or technology people didn't know was possible. It's something that we pride ourselves on. And I think, you know, we've had a great discussion previously on some key topics. And I think, you know, if you take open banking, there's a prize to be had. If you look at the UK market, for example, UK volume has already increased from 66.8 million to nearly 6 billion in 2020 in terms of API calls, which is incredible. The market size reached in globally terms in open banking by 2026 is expected to be around about 43 billion, give or take. And we're already seeing in the UK market around 2.5 million UK consumers and businesses taking advantage of open banking as part of their existing propositions. So there's clearly a prize to be had in terms of this space. And the irony of it all is that all of this came from the regulator. So those of you not familiar, many years ago, seems like eons ago now, the regulator decided that to give more competition in the market, consumers had very little choice in terms of who to go with. So open banking was created, formed out of the UK. This was very unusual for a regulator to cause this much disruption in the market. But what it's led to, in effect, is the creation of a global phenomenon. So what we see today when we think about open banking, it's a very interesting picture, actually, because if you look across the globe, there are certain markets in the world who are actually choosing to play rather than necessarily being forced to by their local regulator. We're already starting to see other markets as well really expand the dial in terms of what open banking can be. UK has a very restricted model in terms of payments and account information, but if you look at other parts of the world like Israel or even Asia, they are really pushing the dial in terms of what actually is being opened up and what you can actually do with that data. And interestingly, the fuel behind all of this is APIs. Now, for the non-technical members of the audience, think of just an API as just connecting something from A to B. So being able to connect two services together. And the regulator recognized that APIs were the right thing to do, because the irony of it all is that we already use APIs in our lives and we probably don't even realize it. So if we're all going on holiday, or if we're all booking things like Expedia, there's an API behind that. When we're actually trying to get from A to B in Google Maps, that's powered by an API. Or if you've ever used a product where suddenly something a bit like Google Maps appears inside of it, that was made possible because somebody connected a Google Maps API into that proposition. And we look at neobanking. Neobanking is all powered by that scalability and the flexibility of APIs. So again, none of this is actually new to us, which again was a brave move from a regulatory standpoint. And if we look across the globe, as we said, there are different parts of the world tackling this in different ways. So if we think about the regulatory driven markets like the UK, for example, that's very much a focus on payment accounts. So the EU is following suit, Japan, and from an industry driven perspective, Switzerland is following the same model. However, as I mentioned, there are other markets who are taking this model slightly further. So if we look at Brazil, Mexico, all the way through to the US, it's very much about open finance. So we start to see more accounts being opened. So loans, mortgages, credit cards, more interesting types of account. And then we go as far afield as Australia, where they've taken it that next level, which in effect is open data. So going way beyond each of those other markets to now start bringing in other data from other areas of your life. So telcos and utilities. So the possibilities with this become endless. And we're already starting to see some common use cases across Europe and possibly globally as well. So credit enablement for consumers is a big one. So actually having better credit decisioning, using the data to inform, is starting to come through. Interestingly, the first set of propositions that were launched in open banking was very much PFM based. So financial money management. It was probably the most obvious one because it was the easiest one to get to market, and you were able to get close to the customer and start to understand their behavior to then start adding other services to them, but also hold on to the relationship, which is the biggest challenge in open banking for the incumbents. You can start to compare and save products. That's a new feature coming through very strongly. And KYC and verification, I think we talked about previously in the panel discussion about identity. Now I have all this extra information about you. I can now give more, I guess, more informed KYC decisions, which again speeds up onboarding and parts becomes process. Because that's an interesting point as well. Open banking often historically has been seen as product driven, when actually you can use some of this capability to enhance your own organization and your own processes. And finally, driven out of the pandemic in some ways, open banking is playing a big role in the small to medium business space. So helping organizations understand their cash liquidity, cash forecasting, bringing in extra data from other sources to build that 360 view of a business's perspective. Off the back of this, then, what we're starting to see is the banks themselves looking to see how they respond. So if you think about it, if you're a bank in a given market and you're being forced to comply, the danger is disintermediation, because the simple fact is you're giving away customer information to your competition effectively. So interestingly, banks themselves now are looking to this as an opportunity rather than a threat, repositioning themselves and thinking, well, how do we want to play in this market? And there are a number of models starting to emerge. You've got the bank as a service, where in essence, banks are actually becoming almost the back end manufacturing for different organizations and giving away services. You've got bank as a TPP, but I'm not going in any order. But in essence, what this means is the bank themselves become like a fintech, and start offering services either under a new brand. In most cases, that is the case. Examples of that would be Yolt under ING. Or you've just got banks who just want to comply. They are for the ones who are forced to do it. They don't see the opportunity, and they literally just do what they need to do as per the regulation. Again, that's for the markets that have to do this. In some respects, that's probably a last resort because of the danger of disintermediation and the fact that you could lose your customer base, particularly in terms of a crowded market in digital. I think the last one, which for me is the most interesting, and it's kind of where this next wave is going, is almost this bank platform as a service, where banks themselves who are more mature on their digital journeys are using their capability to actually provide those as services to either other banks or other fintechs to accelerate what they're doing. And this ties me quite nicely in terms of where does this go. So Open banking, I'm sure everybody on the call now is familiar with that term. So everything I've just shown you is probably not a surprise. Maybe the numbers are surprising in terms of where the volumes and so forth. But if you then take a step back and say, okay, well, I have a load of APIs now. What does that actually mean? In some respects, the pandemic has accelerated digital transformation at some pace. In fact, I remember seeing a recent documentary with the chairman of Kroger who basically said that a lot of their gains and progress they made during the pandemic wouldn't have been possible without collaboration. And we're seeing this concept of a network effect where other industries that have opened up their data and those APIs, organizations are starting to tap into those ecosystems to actually take capability, bring it into their own environment, and very quickly assemble propositions to accelerate their own digital journeys. So in a way, what we've seen over the last 12 months to 18 months is almost the packing in of 5 years of transformation and maturity into 12 months. Now, some organizations have survived, and the others that are excelling are the ones that are either digital at their core or have been able to tap into these network effects. Which is why we're starting to see almost the next wave of what we're thinking about in terms of digital banking, open banking, is a logical leap into banking as a service, particularly where there's limitations, where open banking will only take you so far because the regulation will only let you take you so far. But for those digital banks or those organizations that are mature, they are now extending the financial capability and providing that as a service to organizations, helping them jumpstart their capability. And it's changing the narrative. If you've ever been in an organization, if you're in the technical department, you'll always hear this conversation: do we buy it, do we build it, or do we partner? The reality is there's another dimension now, which is called do we reuse? The days of manufacturing pretty much are coming to an end in terms of building your own things, unless it's your own intellectual property. The reality is I can go to an ecosystem now, partner with someone who actually does it better than me, bring it into my environment, white label it, bring it as part of my proposition, and automatically I could have saved 12 months work, and I've accelerated my digital journey, and it basically enabled me to keep pace with the market. This is going to become much more of a play in the financial sector as the years go by, almost replicating what we're seeing in other industries where the platform economy has really taken storm, particularly in the technology space. We've seen it in retail and also in travel. This is just the next level and extension, if you like, of someone's financial life. The interesting and controversial bit when you start thinking about this is that I'm sure we've all heard the importance of customer experience, and it's completely valid. For 10 years or so, the customer experience has been king, and everybody has really doubled down on it. It's become part of some organization's strategy. The reality is it's no more. We are now designing a total experience. If we think about the journeys that we're designing in digital, we could now be designing for machine-to-machine conversations. We could be basically designing for customer-to-machine interaction, organization to customer, even employee interaction with customer or employee to employee, or even a new person that has appeared on the horizon that we wouldn't have thought of in the past, which is the developer. So when you're stitching together journeys, you have to consider all of these experiences to deliver an outcome for someone. So it's no longer just about one experience. You're designing a complete end-to-end total experience, which really changes the dial and makes you focus not necessarily on just one thing, but more on the outcome in terms of what people are trying to achieve. And the question is then how do you want to show up in this experience? And this is the big shift. If you think about many years ago, particularly in the financial sector, we always talked about the terms, well, someone's having a mortgage. The reality is now we're talking more around, well, somebody's moving home. And if you take the moving home journey as an example, and we take the platform concept, two models are emerging. One is where almost like an Uber model or Habito, which is starting to emerge, where an organization can actually own the entire journey. In essence, then they will bring and assemble the key people to play a part in that journey, but ultimately they will front that journey. And bank as a service, for example, could play a part in that, in providing some of the capability to that overall client platform. The other option, this is a term that's very much becoming quite mainstream recently, is this concept of embedded experiences. So as an organization, I may not choose to own a journey, but I may want to participate in somebody else's. The value of that to me as an organization is now I'm unlocking new value and unlocking the access to new customers that were previously probably not available to me. Leveraging bank as a service or other types of platform, I can then effectively shift the dial and accelerate my participation in that journey, automatically now becoming part of somebody else's journey, jumping around. What's interesting for me is this is just the tip of the iceberg. So as we start to move beyond platforms, we start to unlock a new future. And if you think about the pandemic, the challenges of actually going to the physical world has become a barrier. And in some respects, it's going to take some time, even when we get back to normality, for people's confidence to rise and be able to feel confident to go into physical spaces. What's interesting for me is the rise of artificial intelligence and virtual reality is no longer science fiction. It's actually science fact. I'm actually showing you an image from something we've done for a client who's able to bring banking to their actual customer using VR and AR. This is a space that is actually more relevant than you think. Leveraging the power of APIs, leveraging the power of elements of open banking, other forms of APIs, we're able now to bridge the gap between the physical and the digital world. Bringing new concepts and really changing the dial in terms of what it means to engage with your bank, or in fact engage from a financial services perspective. Doing it in terms of, it's more now around the journey and the outcome, and understanding where you are and how you're going to show up, and the experiences that you design, and ultimately how you then hop between those experiences. Be it on your mobile, you may have started, you may end up in a virtual experience, and then you suddenly may end up on your branch and then back to your mobile again. But ultimately you're designing a total experience. And the VR and AR is just the tip of the iceberg again in terms of where this could lead. But ultimately, this is giving us a sense of, you take the concept of something which seems very small in the context of open banking, it really wasn't in the beginning, because it did cause significant challenges for banks to comply, now to something which is almost becoming pervasive and now starting to tap into technology that almost feel like science fiction. So where does all this lead? For me, when I started this journey, working for a number of banks, helping them with their open banking strategies, I always believed, and it's becoming true, that this is really the tipping point to having that view of someone's financial life, that 360 view. You imagine you have a proposition now that you can give someone that effectively brings in their insurance life, their travel life, all of these elements together, giving them that 360-degree view. For the customer, that's incredible, because for once they can actually see everything about them in one place, enable them to manage and move the money and manage their life. We're almost getting closer to the WeChats of this world, where you end up having a single platform that does it all. What does it mean then for organizations? It means now you have access to endless amounts of information and data with the customer's consent that allows you now to bring meaningful value propositions. I think that's the key. Data sharing is a concern for people, and rightly so, especially given what we've seen in the market and some of the Facebook challenges. But at the end of the day, it comes down to a value exchange. What's in it for me as a consumer? Why would I want to share my data with you in the first place? And that's some of the challenges for organizations in terms of the rethink. Really focus on the value proposition when it comes to this, and then you can start really tapping into an ecosystem that really will jumpstart your business and effectively open new doors that were previously locked. And I didn't want to leave you with just the what, because it's all very well and good to talk about a story and the opportunity, but the question is, how do you start? And ultimately, how do you prepare for this new world? I think the first thing to think about is be API first. What does that mean? Well, any technology changes that are made in the organization, always look to make that an API first approach. I think I don't think there was a letter famously written by Jeff Bezos many years ago, which instructed his organization that every piece of project or any technology has to involve APIs where possible, because he recognized that one day those APIs could become products in their own right. Which leads us to the second point. Any API in the organization, you must treat like a product, like any other product that you would launch, like a current account or any form of wealth product that you would launch, which means it has the same rigor, it has the same elements around it that allows you to launch it and generate revenue from it. In essence, you will eventually end up having to write an API strategy, which you naturally fall into, and some form of ways in thinking about how you're going to monetize those great services that are unique to your organization. Again, linking that concept, think platforms. Think about what you can share and what you can do and the capabilities that you need. But going back to the journeys we saw, decide how you want to turn up. Do you want to be part of somebody else's journey, or do you want to own one? And importantly, then start with the end in mind. Don't just start with, I've got a product and I've got an API. What do you want people to be able to do? And what problem are you ultimately addressing? And for me as an innovator, the most important thing is don't wait. Just get it in the market and test and learn. And actually, the most important point at the end, which isn't on here, don't underestimate your brand. In this market, particularly around competition, people still value brand. If you can do all of those things and leverage the power of your brand, the chances are you will probably be successful and continue to build on relationships that you have, but potentially may open new ones that were previously unavailable to you. And like any journey, there's a beginning, a middle, and an end. Thank you.
My camera is back. Michael, thank you so much for that. I think that was a really timely recap of the journey that we've been on with open banking and what the future with APIs at the centre of it might look like. So thank you very much for that. It's absolutely fascinating. I'm going to hand over to Christos Niozu, who's the Managing Director at iSpiral. This is our sponsor session, so I'd like to take the opportunity to say thank you so much to iSpiral for sponsoring the event. And I'm now going to hand over to you, Christos.
Thank you so much. Thank you. All right, let me share my screen. Okay, so I'm Christos. I'm the Managing Director of iSpiral, a regulatory technology company focusing on providing technology solutions for detecting money laundering and frauds. So today's, today's presentation will be focusing on the subject matter of how to implement the right anti-money laundering and fraud detection and prevention solution. So I will giving you a couple of tips of how you should be approaching that type of implementation. Now, before we move, I would like to give you a definition of what is fraud and what is money laundering. So with a simple definition. So fraud is when your organization or your client is losing money from a fraudster. Money laundering is when you are in danger of getting fines from the regulator if a money laundering scheme has been, let's say, done, has come across through your organization and you didn't detect it, or you are losing your reputation eventually. So let's proceed and see what will be the points that we're going to be discussing today. In the first part, I will be giving you a few challenges, a few clear challenges of that you're facing as far as KYC, AML, and frauds. On the second part, I'm going to be showing you what is a classic approach that most of the organizations are taking nowadays. On the third part, I will be going through the best approach you could have as far as detecting and preventing money laundering and frauds. And on the fourth part, I will be giving you a very quick glimpse of what you can do with iSpiral solution. So the first challenge that you are probably facing it's the complexity of onboarding, both for legal entities and funds, and of course individuals. There you can see. I usually see many companies that are still sending PDF documents through email so that the customer can complete them and send it back. So you see a lot of back and forth emails of what is needed to be gathered so that you can fulfill the due diligence and KYC obligations that you have. So this is one of the challenges that you're probably facing. The second challenge is digital identification. This is one of the major points on the discussions that you had earlier in the last panel. So are you who you say you are? So there are different, let's say, challenges on addressing this issue. So this is the second challenge that most of the companies out there are facing. The third one is AML screening and ongoing monitoring. So is your client a politically exposed person? Is it sanctions listed? Or is your client associated with such a person? I mean, the challenges that we see there is the effort that the compliance officers are putting in order to minimize the false positives eventually. So this is another challenge that you are facing. Of course, the ongoing risk assessment that has to do with anti-money laundering, product governance, client acceptance. There is a lot of complexity of how every risk assessment type should be calculated. The fifth point is related to the regulatory reporting. The supervisors across all jurisdictions are requiring T20 types of reports. So we have the obligation to generate these kind of reports. Of course, we see nowadays the supervisors going towards a much more supervisory streaming approach. But right now, most of the regulators are requesting this type of reports. And finally, transaction monitoring, the transaction monitoring challenge in order to fight money laundering, frauds, and tax evasion. So, what is the classic approach of transaction monitoring nowadays? Most of the banks, fintechs, and other financial organizations, they are using this type of approach since it's more common to be found. So usually they have the engines that they are using, the vendors that they are using, they have a rule engine where you're passing to the rule engine the full customer profile of the client. That includes everything that you have gathered regarding the client, which is the country-based parameters, the economic profile of the client, services that you're providing to them. You can feed within the rule engine the activity data, the transactions, trading, gaming, contracts, and so on. Another input to the classic approach for transaction monitoring is the expert knowledge that can, let's say, set up the rules needed in order to detect any type of abnormality. So this is another input that is given. And of course, from there on, when the rules are creating the cases, you have a team of experts that they need to investigate every case independently. And from what you see here is very labor intensive to go every case independently, so that you can analyze to see why this case has been created and what actions should be taken in order to be able to see whether this is a false positive case or whether it needs escalation. So eventually you have the rule engine, which is based on the if then else logic. You have the cases that are created. You have the experts that are investigating every case that is triggered. And from there on, the experts are tracking whether this is a not suspicious case or whether it needs an escalation. So this is the usual approach. This is a rule-based approach. This is a classic approach that most of the financial services are using nowadays. So what would be the best approach here? What would be the data-driven approach, the machine learning approach that would be minimizing the effort needed at the same time, maximizing the true positives that needs to be investigated. So what changes here is eventually this is a hybrid-based approach. So you have the rule engine, where you need also the expert-based approach as in the previous picture, as in the classic approach. But what changes here is an additional level of a machine learning model, where it's giving a transaction risk ranking on every case that is created. At the same time, here you can add the additional level of an unsupervised model, where it can find any type of abnormalities that could not be detected by the rules that already exist within the solution. So from there on, you see that the system itself, without the help of the experts to investigate each case independently, is ranking the transaction, is giving automatically which ones are not suspicious. Then on a different mode is giving the ones that are high scored. And at that point, you need the expert advice in order to determine whether the ones that have been scored needs to be escalated or whether they're not suspicious. Now, I should point out here that the compliance officers are not going to be ever replaced, because the critical thinking of the compliance officers cannot be replaced by an artificial intelligence tool. This is what we see. This is what we see, that this is not going to be at least changed in the next 5 to 10 years. So what is our proposition now? Our proposition is a fully fledged, all-in-one compliance solution, which is independent from your CRM, from your core banking solution, but at the same time is fully integrated, so that you can seamlessly and frictionless onboard your clients, either legal entities, funds, or individuals, by using digital identification techniques like video identification, liveness selfie, official identity documentation, verification, OCR, so that eventually you don't ask your clients too much details other than what that is needed, and draw this info back to the RegTech Plus, to the risk engine, so that in milliseconds you get a response whether you need to accept the client or reject the client, or send it for manual acceptance. And this all-in-one solution includes whatever is needed as far as risk assessment, transaction monitoring with machine learning capabilities, mitigation actions needed in order to mitigate the risk of a specific client. And here I'm showing you a couple of screenshots. This is a screenshot where the client themselves, they can go in, they can fulfill all the questionnaire needed, they can upload all the documents needed, they can do a video interview themselves, and they cannot submit it unless all the validations are done by the system. You consider that you eliminate the back and forth of emails, you eliminate the time needed from a few days to a few minutes to accept the client, and for legal entities from a month to just a few days. So this gives an additional value to the financial organization to use a technology that helps you onboard the client in just a few minutes. This is a view of what the compliance officers would be able to see. I mean, what is the compliance profile of the client, so that eventually the system will drive, all the necessary tasks automatically, from AML screening, from identity verification, from risk assessment, and from there on, the whole monitoring of the transactional behavior of the client. So this is what I wanted to say. This is what I wanted to show you. Thank you so much for your attention. Looking forward to the next panel. Thank you so much.
Great. Christos, thank you so much. Without any further ado, I'm going to hand straight over to Kuan for our next panel discussion, which is on the topic of rethinking the payments operating model. Kuan, I'll hand over to you here.
Thank you so much. So can I please get all the other panelists also to come on stage? And we have an amazing panel today with having Ruta from Bank of Lithuania. We have Anders from Finastra. We have Virginie from JP Morgan. We've got Panagiotos from Unzer. We got Christos again from iSpiral. And last but not least, Polis from NetInfo. So please all join me on stage. I see many of you are already there. And what I would like to discuss today with you are three main topics. Well, actually, the first one will be around, guess what, payments. So a lot of topics have already been passed the floor today. And I would like to explore what is it we have not talked about. So what are the missing elements of the discussions of today? After that, I think I would like to go a little bit more on the collaboration model, like how could banks work together with regulators, with fintechs? And last but not least, what is then the impact of RegTech as a notion of new type of fintech into the industry with a focus on payments? So if I may start with the global banking trends and focus on payments, may I ask Polis, as being globally in this industry, what's your opinion? What are the elements that we have missed? What has not come to the floor yet today? Yeah, still muted.
Great, thank you very much.
Here we go.
It helps.
It always helps.
Yeah. Thank you very much for the introduction and for addressing the floor. Okay, what we have seen in the past, we have seen in Europe and Western countries a lot of effort on fintech services, fintech technologies, and this is before pandemic. And in Asia and Africa, we have seen what we call financial inclusion with new technologies, so that will enable the citizens and the customers of the banks to be part of this financial ecosystem. During the pandemic, things changed slightly. They have changed the payment institution and the banks. They have changed their digital strategy. The first priority, of course, it was to give access to their customers, to their financial funds and to their assets, so that to be able to continue their life and to address the challenges that they're facing during this pandemic. And with this in mind, we have seen that the generation gap shrinking a lot. So that before we used to say that, okay, we have millennials, we have different type of customer categorization, that they had preferences on the digital channels. But with pandemic, we have seen that this generation gap was shrink, and it was the only option for citizens and for the customers to address their financial activities. So this was something that it helped a lot, as we discussed on the previous presentation. This pushed a lot through digital channels. And the other thing that we have seen is what we extensively covered in these presentations is the ability to expand their ecosystem in using the APIs and using open banking extensively. So we have seen this eco-environment system going from financial institutions to governments, and we have seen insurance companies collaborating under this umbrella, under this new eco-environment establishment that will enable now not only the customers, but the citizens to maintain their status, their activities, and we have seen a collaboration between governments and banks under this open banking, under this new model in place.
Well, thank you very much, Polis. I think that makes sense what you just said. I was wondering, maybe Anders, do you have a different view on this, or what has not passed the agenda yet?
So I have quite a few papers on mind mapping that I've been doing over the last hour and a half, and my first reflection was then similar to Sulabh, and Sulabh is a good friend. That we talk about the mega trends that is shaping the financial services industry. We have a tendency to just extrapolate what's happened over the last 6 months. But then I was pretty much baffled by Michael's presentation, because honestly, what I think that we as a payment and banking industry is lacking is that we're lacking the visionary narrative on how we think banking and payments will be done in 2030 or beyond. I think that I take the chance to use it because no one else has talked about the Bill Gates quote on that no everybody wants banking, but nobody wants banks. And I think that was a visionary narrative back then. I think it's some 25 years back. And I think that I was really refreshed about that. And the way that I see the talking about the operating model of banks or other agents in the financial services ecosystem, I typically myself define that vision narrative. It may differ somewhat to Michael's point, but I think that you need to have that visionary narrative in order to define your business model, right? And I think that what banks are lacking, and where fintechs probably got it right for now, whether it sustains or not, we will soon to know, but is that ability to adopt the business model to that narrative. And that business model then will be forcing how you actually do your operating model. And I used to, when I advise with banking executives, I used to ask them, are you going to do distribution or advisory, or are you going to focus on manufacturing? And I would say that at least 5 years ago, 90% of the banks said we're going to do both. Now there is a more diverging opinion around whether you're going to do manufacturing or distribution. And I think that that's a core to me of an operating model. I take the energy and utility as an example. There are 6 companies in Europe producing 80 to 90% of all electricity. But I guess that we're all based in different cities in the world, and we could face so many different distributors and resellers of energy. And the challenge for the manufacturing energy companies are they have very low profit margins, they are facing high regulatory pressure, they are scrutinized by press and public, whilst the distributors are seeing themselves giving high profit margin and ability to actually cross and upsell other services. So I think that to the core of what I define as an operating model, I think that you need to be following your narrative, the vision, and create the business model, and then start defining that operating model. And I think that I would have liked to hear more about banking as a service, because that's, to me, is a way to use yourself as a distributor to whoever would like to consume banking, not consume banks. And I think that it's still very immature, even with fintechs, having that notion of understanding where they are looking to play in the ecosystem.
No, I like that thinking, and for me it came back to what was said earlier around payment versus money, and that makes us think about what's the narrative of a bank, what's the raison d'être of a bank, why do we exist as a bank, and for me, I heard then also bank. It comes for me in trust, because trust is some very big element in a bank. Taking that into crypto, taking that into blockchain, I think there is a notion of distributed trust, interoperability, a collaboration between banks, fintechs, and regulators. Ruta, what do you think with this statement? How do you look at this as a regulator? How do you see the collaboration amongst the three parties to happen?
I guess if we see the platformization is happening in customers' journey, it's not a secret, it's not something unlikable, that there is a collaboration between both banks, fintechs, regulators, supervisors. That's a normal thing. What I think has changed, or what is changing from the product-wise and why it's changing the collaboration. Before, when we looked at the product, we looked at the product governance itself as investment product. There is payment product. We didn't really look to the customer. Yes, of course, we wanted to present this kind of product to a customer and say, but this nowadays it's more about customer journey, and customer, he doesn't care about the compliance, and therefore you need it to be as invisible as possible. Therefore, you need collaboration both with RegTech, the solutions that enables you to facilitate your regulatory compliance, and you need a collaboration with supervision, because supervision, it might be done differently. For once, one of the example of Bank of Lithuania, we collect the reports from our companies. They just put the data of the balance. What if we could buy Open API application programming interface to connect to the bank and just throw out all the data that is really required for AML compliance, for any other compliance, that would really make invisible this thought, this thing for a customer, and another thought it would be less costly for companies, for fintechs, for banks.
So actually, are you saying it's no longer the rise of RegTech, but it's the rise of SupTech, supervisory technology?
Yes, of course. Because by the end of the day, why do you need RegTech? You want to be compliant, and to be compliant, to have this really conversation with your supervisor. That supervisor would say, yes, there is a stamp of the compliance. So at the end of the day, it's all about that.
So I hear you say that takes three to tango. So I was wondering, we have the luxury to have many different faces in this panel. So what about, for example, Panagiotios, if you look at it being from a fintech, how do you see that collaboration happening between the regulator and also the bank, the incumbent bank?
Yes, thank you. Just as an introduction, I think for me, I think there is a famous quote that, I heard somewhere that we tend to overestimate what is happening in the next 6 months, and we tend to underestimate what will be happening in the next 10 years. And I think this is also happening after the pandemic. I think it's a fact that we see many trends being accelerated. That's a fact. For example, e-commerce, everybody is going digital on the one hand side, and because this is a very recent memory, I think everybody is kind of sticks to this, but we tend to kind of lose, let's say, the big picture. So what will be happening in the next 5 or 10 years? Now, in terms of the collaboration between, let's say, the fintechs and the regulators, I think that one of the good things of the pandemic is that it has forced, let's say, a new thinking of the business model and what makes sense and what doesn't. We have seen, let's say, valuations of some fintechs having a rethink, I would say. And I think this is also going in the direction of the regulators. So I think there has been a discussion for a long time now around the approach that this will take around regulating, let's say, fintechs and their operations in a different way. I think we are not there yet in terms of a model that would would be a standard one. But I think that the approach is going to be for sure a stricter one. Now, what kind of I think we do have. Anders was mentioned, for example, banking as a service. I also see the so-called platform approach, which these two notions for me are coming, let's say, all the more, especially after the pandemic, to the fore. And if you look at them, for example, they are both, let's say, the opposite sides of the same coin. They are one is the inverse of the other. And I think with all these things happening, now the fact that every fintech every company can be a fintech. You can actually rent financial services now very easily. I think now we have to think, and the regulators also have to think what will be the approach that they will be taking in terms of having institutions offering financial services that at the end of the day are not or could not be directly regulated. So I think that's a model that is still evolving. I think the trends that we have been discussing so far will be influencing this, and I think it's going to be a very interesting thing to follow.
Well, when you state it like this, it's almost like platformification, interoperability, banking as a service. It's all about, again, that collaboration. It's bringing multiple things together. I was wondering, Christos, as also working for a fintech, how have you experienced COVID? Has that had an impact on you, and especially towards these large terms like platformification? And so, how do you look at this?
I mean, I should say that one of the things that COVID has changed, and I have seen it almost in all clients that we are working with, they have changed the way that they are onboarding clients. And definitely the last year, we have seen more companies using client remote identification in order to onboard clients. And this has changed not only because of COVID, of course, but due to the fact that most of the countries have transposed the Fifth AML directive into their legislation. And as you probably know, the Fifth AML has introduced the European regulation of trust services, which is the EIDAS, which is giving guidance on how to identify new customers remotely. So I think that was the point that most of the financial organizations have put a lot of attention to, because I mean, banks could not accept clients within the branches, so they had to find a way to start accepting new clients. So remote onboarding, I guess, and remote client identification was one of the things that I have seen that has changed.
So would you say that digitalization has been a push, as it already has been said several times, that a transformation of 5 years has been put in place and has been taking place in 12 months? So that's a bit what you're saying, right? Under pressure, things become liquid, and as an industry, we look for new solutions. I was wondering, and as being working at Finastra, it's obviously a very large organization as well, providing a lot of services. How do you look at that collaboration with fintech and supervisory, also regulators?
Well, I start off with a dramatic statement and saying that we are realizing that we're facing the risk of dying. As one of the largest banking technology vendors in the world, what I envision in not so long future, that companies similar to ours and our competitors, if we do not transform, we will soon cease to exist, right? So we have taken on ourselves on a 3-year transformation journey. And the reason is that for what I exactly said around banks changing model, because we're typically supporting the largest banks in the world, not only in payments, but in other areas. And we're seeing them changing their models. I've also been predicting for quite a few years that banks, as we know them, will also die. And the challenge for us is that if our customer base is virtually dying out, so will we soon cease to exist. So we're fully embracing the banking as a service. And I think that the way we're doing it, and I think that Michael referred to it as well, Michael has become my new fan right now, is that we need to have the end customer journey in mind, right? Where I think that there is also a bit too much of a focus on retail customer. I think that corporate banking and corporate financing is also extremely important and probably generates greater set of revenues for most agents in the system. So, as an example, I work within an Iberian bank on where they wanted to work with an insurance company, and the insurance company wanted to be offering a digital journey for their end customers. And they had an hypothesis that a loyal customer is defined by the fluctuation in the current account. You can argue whether that is right or wrong hypothesis, but that were their hypothesis. So we were looking to use open banking to assist from the moment of onboarding a new insurance customer to the insurance company on loading up account details from the bank, coming with address and social security number and everything you had, directly integrated to the ERP system, as well using the fluctuations in the account to develop their pricing, whether they wanted to consider the client as a loyal or a loyal customer. So they were using...
Anders, are you saying that then it's all around the 360 view of the customer, right? It's getting all the different data points, having them brought together in building that customer experience, right?
Kind of. I'd say they're more of a 180 degree, because you're looking to take the client from A to Z and provide services along that. And I think that the success for a fintech or a bank or SAP or Oracle as an ERP vendor is having the ability to support the entire customer journey.
I like that thinking, and sorry if I cut you off. I'm just looking a little bit at time, because I really liked Jimmy's question, because if you think about 360 view or 180 view, whatever you look at it, how can you not take into the big tech companies into account? So I was wondering if somebody has an opinion. Are banks likely to be crowded out by big tech companies? Let's see a couple of hands going up. Maybe Panagosios, if you can take that one. You're still muted.
Yeah, sorry. As a first comment, I think that the most, let's say, critical factor of banks being afraid of the big tech is of losing the relationship with the customer. Because what we see happening nowadays is, we talked about banking as a service. So we see financial services being, let's say, running in the background by different providers. At the end of the day, it might be the case that you have some kind of bank running at the background, but they're not going to have the banking relationship with the customer. So they are losing access to what is probably more, or they could potentially be losing access to what could be the most potential information and the data around it. And I think in this respect, you have big techs playing the game very well. So the question, of course, is, are they really want to go into banking or not? And then here you might find different approaches and different answers. But I think for me, certainly the case has been that you see all the more big techs moving in a direction which is called the financial services, with different products and different services. However, most of the times this has been happening through partnerships with banks. And that's why I'm saying that that for me, the biggest, let's say, fear for banks should be how they're going to manage this kind of transition so that they become irrelevant. Because if they stay at the background, they might become irrelevant at the end of the day.
So what you're saying then is, it's the magic word is still collaboration. It's to find the sum of many.
It is collaboration, but the question is who is going to do what. And for me, the issue is that, for example, there is a new business model or a new business opportunity for some banks to have additional revenue. Okay, that's okay. But for some others, let's say bigger ones or niche ones that used to be the access and the gate point to the customer, and they now might be realizing that they are losing some of this to other players. That might be difficult to handle, or they might need to transition to a different setup.
No, absolutely, and it's a very interesting topic. And sorry, guys, I'll need to stop the conversation because we're almost in time. But I wanted just you guys to give you all one sentence that could be a comment or an advice to the audience, because I know I have been running more quicker than expected. So if I can start with Polis, your one magic word bullet point, what would it be?
Very good. I will start from the point of Panayotis. The customer acquisition and the customer relation is very important with financial institutions or with the fintech or with the banks. And it's how we maintain this customer journey and providing them mobility through a complete service coming from the back-end supports, from security, from AML, and the whole process.
Okay, thank you. Ruta, what would be your one key sentence for the audience?
So it's about connecting dots and asking your customer not what do you want, but really providing and saying, I see the data on you and I know what you want. So this
Excellent.
is mine.
Thank you. Christos, what would you say? Your 1 minute fame, your one sentence fame.
All right. So I should say that, fintechs and banks, they can definitely increase, the number of clients using new technologies and lower their cost by going digital.
Excellent. Panagiotis, and I hope I said it right this time. It's
No
a
problem.
tongue twist for me, I'm sorry.
Yeah, no problem. It's a common issue for me. I would say 4 things. For me, the name of the game should be around rich actionable data, technology, collaboration, and the customer focus or the customer relationship. I think these are, for me, 4 key topics going forward.
Thank you very much. Anders, as being the last one in the panel, what will be your one sentence?
My advice to virtually anyone would be to define your core capabilities and differentiators and ensure that you're solving for the end consumers or customers' problem.
Thank you so much. You guys were an excellent panelist. I really enjoyed it. I'm sorry it was a little bit shorter, but at the same time, we managed to give new ideas to Lily and the organization to bring up another topic in another event. So thank you very much for that. I'd like to get Sophia back on stage for just a couple of closing remarks on the event. Here we are. We got Sophia, we got also Lily. So what was your impression, Sophia, of today's session?
Well, we covered a lot of ground. I would say in a nutshell, I feel what this event has what it has spoken to me today is that the fintech, RegTech and payment industry and banking as well is at a crossroads with a number of really big questions. What is a bank for? Who is a fintech? What is currency for? What is the role of a central bank? Who does ID belong to? Who does data belong to? How do we make sure that customers are being treated in a way that is safe and fair when it comes to their data? And huge questions. And I think one thing I gleaned from today is that, the decisions and the answers around this are political as well as technical. And I'm just very, very grateful to all of the panelists for weighing in on this. And I'm also really glad that you brought up banking as a service and big tech and finance in your panel, because those, for me, are 2 of the most fascinating changes in the industry at the moment. How about you, Kim? What did you think were the big takeaways from today?
Yeah, no, to be honest, as I said in the beginning, I'm a much more of the investment guy. I'm much more of the RegTech enthusiast and slightly a little bit worried of all the in-depth discussion we would have about payments. But at the end, I realized that many of the topics are very much the same, or pretty much also about ecosystems, platformification, and so on. And that type of discussion I like, because it brings us to a different type of thinking. It brings us to a lot higher view, or much higher view from the helicopter looking at our industry. And I kind of like that, because then for me, if you're from that height, you also look at what's the real deal for a bank. Why do we have a banking industry? And it brings up topics like financial inclusion, the banked, the unbanked, things that we did not talk about today. But if you go higher up in the food chain, then these are the topics that become very relevant again. So I was very pleased to hear that also as a common theme today in the discussions. And yeah, I really would like to thank the panelists, all the contributors, everyone involved, all the people joining in today. It has been an amazing experience for me. Thank you so much. I see Lily
Yes,
is coming back as well. Yeah.
Yes. Just wrapping up. We have like 30 seconds before the event time's out. On behalf of CUBE, thank you to everyone. Amazing presentations, great feedback. I know I've used the word amazing a lot today. My apologies. I just feel very excited about all the conversations today. They were really brilliant. I would apologies from Virginie from JP Morgan. We actually had a technical issue trying to connect her on the stage. So Kun, sorry you didn't find her on your panel, but
no problem.
For the past half an hour trying to sort out her technical issues. But yeah, sometimes networks from the bank seem to cause all sorts of firewalls that are unexpected. Anyway, thank you to everybody for your contributions, to our sponsor, iSpiral, and to the CUBE team for putting this together. And very big thanks to you, Kun, and to Sophia for getting this together. Fantastic moderation. I'm going to hand over to Marta.
Yeah, I can say just thank you all for participating, being with us. I hope it was useful, exciting, and inspiring. Kun, Sophia, awesome job. I really love the energy and everything. So I hope you'll be with us also next time. And looking forward to maybe one day.
Thank you. Thank you. And just before we close off, just a final message. We are circulating. You will get a video version of this email to you directly. And you will also be getting copies of the slides for those that have been asking that. So, and also if you don't mind taking 1 minute just for your evaluation form would be greatly appreciated. So thank you to everybody. Again, to our moderators, fantastic job, to our sponsor who makes this possible for us, and to all the team, Marta and the rest of the CUBE team that have been working so hard on this. So thank you, everybody. Have a lovely day. Thank you so much.
Thank you. Bye.
Thank you.